Thank you, everyone, for joining us. We really appreciate it. What we're going to do today is just take you through a clear, practical look at auto-enrolment, what's coming, how it will work day to day, what employers actually need to prepare for. There's been a lot of discussion and quite a few questions around the scheme. So the goal of this afternoon is to make it feel maybe more straightforward and manageable, while Martin will obviously look at alternatives. I'll take you through the essentials, what it means for employers, employees, how payroll will handle the new deductions, and key steps employers need to take ahead of the employer portal opening in December, and that's early December. We don't have a definitive date. If anything comes to mind during the presentation, please drop it into the chat. So let's get started. We'll talk about what enrolment is. So with the basics, auto-enrolment, it's a mandatory retirement savings scheme. The whole idea of this is to boost pension savings schemes across the country, especially for people who don't currently have any coverage. One of the big issues in Ireland at the moment is the pension gap. Lots of employees simply never got around to joining a pension. And with this system, anyone who meets the criteria, and I'll go through that in a while, doesn't already have a pension, will automatically be enrolled so they don't miss out. For employers, a big advantage is that you no longer have to set up and manage your own occupational pension scheme if you don't want to. And in most cases, obviously, employers would want some form of a scheme, but this is an option. The system is designed to be run at a national level with very little administration on an employer side. Once everything is up and running, most of it would flow through payroll automatically. So your payroll department may not agree, saying that it's going to be seamless. The core idea is to increase savings, reduce the gap, and make it as simple as possible for employers to follow through. Now, how it's going to work, auto-enrolment will operate in the same vein as the PAYE, PRSI, and USC. Once an employee has been identified as eligible, the deduction will be paid through payroll without exception. There's no option to opt in or out on that. The payroll instructions will be issued by NERSA via an APIN. This will function similarly to how Revenue currently transmit tax credits and RPN updates. So that ensures that in auto-enrolment and contribution details flow directly into payroll systems as such. Given this, employers must ensure that their payroll software is prepared to accommodate these new instructions. And I have to say, payroll providers all over the country have been working closely with NERSA and the Department of Social Protection, and I believe the technical design of the scheme is now complete or near completion. Overall, the intention is to streamline the administration for employers, with the process becoming largely automated once appropriate software updates are in place. And let's be real, it's a mammoth operation that is being rolled out here. So we expect that the first 3 months there will be a lot of tweaking, as would be with any major project, especially government project. Now we're going to look at who is eligible. So auto-enrolment applies to all employees who meet the following criteria. They're aged between 23 and 60. And by 60, I mean 59, because once you're 60, you're opt out. But I'll talk about that later. They must earn 20,000 or more across all employment. They don't already have a pension scheme. Our contributions are not being paid through payroll. So that is answering one of the questions about the PRSA. They have to go through payroll to qualify for not to be auto-enrolled. If these conditions are met, you'll automatically be enrolled into the scheme without any action, or without exception, I should say. Employees who fall outside the criteria may still opt in. For example, an employee who might be under 23 or over 60, and whose earnings are below 20 can opt in if they wish. And that will be via the portal, which will go live in early January. Equally, an employee whose already contributing through the payroll is exempt from auto enrollment. So that's very important to note. Okay, so if you've already got an employee who is making a contribution to pension scheme and it is going via payroll, they will be exempt. There are also other categories, as Martin alluded to earlier, that are exempt, and they include the self-employed, directors who are in Class S, and also any family members who are employed using Class M PRSI. That is important. They will not be enrolled. Now, when we talk about company directors, some company directors are in a Class A. So if they are in a Class A, they will be enrolled if there is no pension, if they're not making pension contributions at this moment in time. Now, in as far as the rates are concerned, employers will match the employee contributions. That will always, and the state then will pay a top-up on the employee's contributions. And this is instead of tax relief, which you would normally get from an employee would normally get if they were contributing to an occupational pension scheme. Now, to help everyone adjust to and become accustomed to the additional cost, and let's be honest, it is an additional cost, contributions will be phased in for the first decade of the scheme. So they will start at 1.5% for both employee and employer, and will rise by 1.5% every 3 years until the 6% is reached in year 10. Now, obviously, the state's contribution will also increase. Now, to be really clear, though, this phasing in will only cover the first phase of auto enrolment, not the first 10 years of an employee's career. We've had questions on that. So all new employees joining after year 10 will start at 6%. All contributions will be calculated on employees' gross pay before deductions. And this means anything that's included in gross pay will be assessed for the contribution rate. And that includes basic, overtime, commission, BIK, etc. Whereas normally with an occupational pension scheme, it is usually just the basic pay and holiday pay that would be pensionable. But this, everything is, including BIK, and that is something to bear in mind. Now I'm just going to go to the next one, which is about multiple employers, and we're going to look at how that works. In the case where an employee has multiple employments. So, for example, in this case, we're looking at one job A. In job A, he's earning 10,000, or she, and job B, 15,000. What the system will do, or NERSA will do, is based on information received from revenue, they will look at that and say, oh, this individual is earning over 20,000. They automatically qualify because there are no pension contributions being made for them. So they will automatically be enrolled in both jobs, in both roles. Now, if, for example, one of those is actually involved in contributing to a pension already, that job B, for example, might be making contributions to a pension scheme. In that case, that role will not be auto-enrolled. Now, revenue, it is important to note that employers won't have to look at who is eligible or not, because revenue obviously has visibility of all earnings, and NERSA will issue the instructions confirming who is to be included in AE. So it just takes that pressure off most employers. There was a concern out there that they may have to identify who is eligible or who is not. Now we'll talk about how the My Future Fund is to be administered. It is, as Martin mentioned, NERSA are been recently appointed. That stands for National Automatic Enrolment Retirement Savings Authority. It is a mouthful, and they will oversee the whole scheme. So they will manage the administration, compliance, communication, and the overall operation of the enrolment at a national level. So they're going to use payroll data supplied through revenue and to identify who's eligible. And what they're doing is they look back at the previous 13 months or 13 weeks and identify, is somebody earning over 5,000? Based on that, they will assume that they're going to be, their earnings for that year will exceed 20,000 and will automatically enroll them. Each employee will have a savings pot as well that follows them throughout their working life, and that's NERSA will manage that. And if they change employer, the pot will move with them, regardless of what section, if you're moving from one sector to another or just moving roles. And finally, they will also look after the investment element of the pension fund. Now we'll go to the portals, and this is how really NERSA are going to manage the operation of the auto enrolment. First, there's the employee portal, and this will go live hopefully in January 26, where employees will be able to manage their participation of the scheme, including opting out, opting in, contribution suspensions, and re-enrollment. And again, like I said, that will go live in January 26. We have not been notified of the date that it will go live. We haven't been made aware of that yet. The employer portal, now that's really important for all of us. That is we're expected that will go live early in December. And all employers, regardless of whether they believe they have an auto enrolment exposure or not, need to register for this. They will be able to register on the portal using their ROS credentials, and which means they will also be able to set up their payment arrangements ahead of the go live date. And we're encouraging all of our clients to opt for the variable direct debit, just in line with how they make their revenue payments on a monthly, weekly basis. So together, these portals form a kind of a core part of the administration system and will support we hope, a smooth rollout of auto enrolment. Now, I have kind of spoken about how NERSA will identify who is eligible. But like we mentioned earlier, there's going to be a 13-week look-back period, and that has been applied to determine whether employees meet the 20,000 annual earnings threshold. There was a concern that they would stop doing the 13-week look-back in November, but we now believe that they're also going to do this in December. Now, when they make this assessment, when they assess whether an employee has already got pension contributions being made through payroll, that will help them decide whether somebody is actually, I suppose, eligible for auto enrolment to be, and that helps. A lot of our clients have had concerns whether if they set up a pension scheme in December, would it be recognised by NERSA in January? We expect that it would be. If there is an overlap, the employer can apply for a refund via the portal in February. Now I'm going to go through those clients who can, or those employees who can opt out. Employees can opt out, but within a specific window. First, they have to remain enrolled for the first 6 months. And then after 6 months are up, there's a 2-month opt-out window. That's month 6 and 7, where they can opt to leave the scheme if they want. But just bear in mind, they will be re-enrolled after 2 years. And this will continue happening for a period of 10 years. The employee can opt out, but the employer cannot. Just to bear that in mind, because a lot of people have asked us that question. So how will the auto enrolment process work from start to finish? So employees are identified automatically using the payroll data, so there's no manual checking for employers. There'll be no waiting period. once an employee meets the criteria and isn't already in a pension, they're going to be enrolled immediately. The employer's role is to make sure that the deductions are applied correctly in payroll. NERSA will send the instructions directly to payroll, just like revenue does today. One thing to bear in mind, though, contributions are then collected from both the employee and the employer based on gross pay. That is something we just need to keep reminding ourselves. And also that those contributions will be debited after 6:30 p.m. on payday. So if your payday is Tuesday, 6:30 that evening, after 6:30, the account will be debited by NERSA. No amendments can be made to payroll after that time, and NERSA has made it clear that there will be strict enforcement, as this could, lead to delays and have an impact on investment. So that is something that they're really very concerned about. Full compliance will be required once auto-enrolment goes live. The WRC will be overseeing the enforcement, so employers should ensure that their processes are in place from the start. The Minister, Dara Calleary, has indicated recently in newspaper articles that he is looking at introducing emergency legislation in the case where, to prevent, actually, I suppose, employers from creating an inferior pension scheme in order to find a workaround to avoid AE. So that is something we're definitely not encouraging. That would not sit well. And I would expect the WRC to throw the book at any employer who thought that they found a way around it. Now, what are the next steps employers should really look at? And they should audit, as far as I'm concerned, they should be auditing their current pension arrangements, look at the scheme that you've currently in place, and identify which employees you believe auto-enrolment might apply to. I think, it's, like Martin said, it's important to plan for the budget. Contributions will rise over the next 10 years, and it is important to model the cost and build into it long-term financial planning, because 6% is where we're going to be in 10 years, but we don't know where we're going to be after the 10 years. There's no indication that it will not increase as one would expect it would. I think it's important to review your payroll system, talk to your payroll provider, and make sure that your software will handle the auto-enrolment requirements and the upcoming instructions you will receive from NERSA via their APEN. I think it's very important. I expect that most Irish payroll systems will have that incorporated into their updates in 2026, but have that conversation. It is also important that you look at your communication strategy. Employees will have questions, and it is important that you prepare for them now. And get the message out that this is happening, because otherwise, if they're not aware that that they may be auto-enrolled, there may be a lot of questions in January if they're not aware of it. And it will just make the transition for you and the employee much smoother, we hope. And I would also say stay informed, because they're constantly tweaking the system, and we should be looking out for, there's a lot of advertising going on at the moment. Government is doing some, and also NERSA are constantly updating via updates there, whether it is on X, social media, and obviously newspapers, etc. I think the main message here is to start planning now. Preparation will make the implementation far easier. And as I suppose Roy Keane likes to remind us, if you fail to prepare, well, you know the rest. Auto-enrolment is definitely one of those which, preparation will pay off. Back to you, James.